Okay, let's start our webinar today. Good afternoon, everyone. Today we are going to discuss the topic of tax fraud. And our topic is avoiding tax scammers and prepare for IRS communications during tax season. Cybercrime of all kinds is on the rise, and the 2024 tax return filing season is here. Scams from bad actors posting as the IRS agents have also surged. Understanding how the IRS legitimately contacts taxpayers can weed out many of the scams immediately. Knowing your rights and where to turn for assistance is if a scam is suspected can help you avoid these traps and protect your identity and assets. At this webinar, we will focus on discussing the following topics. What are the badges of fraudsters posting as the IRS? How to tell a real IRS communication from a fake communication? How to deal with a letter, telephone call, or in-person visit from IRS? And what are safe methods of payments to the IRS? Before starting our discussion today, I'd like to introduce ourselves. We are RUI attorneys. We are a law firm specializes in estate planning, trust, and tax planning. I'm attorney Xiaowei Li. Together with me is attorney Michael Li, who is our tax attorney and our major speaker today. Michael, could you please introduce yourself?
Oh, greetings all. It's very nice to have everybody on today. We are on the home stretch. It's about just about 11 days before the individual filing deadline passes. So Mike Lee, I'm a state and tax attorney. We deal with a wide range of issues for clients from planning to controversy. And since we're on this home stretch for tax filings, there's somebody's thought of saying, oh, this maybe is a little bit late, but actually not really. The scamming tends to come around the filing deadline and the couple months thereafter, because prior to that, everybody's scrambling to get the returns filed. It's usually a hot time for scammers right after filing because people, of course, think this is actually true of the IRS. Once you file after a few months, sometimes there is a responsive letter. So, interestingly enough, scamming and problems with false persons pretending to be with the taxing authorities tends to actually peak sort of now forward.
Okay, I also like to announce that our webinars is for educational purpose only, and if you have any specific questions, feel free to reach out to us after the webinar and schedule a one-on-one consultation. Okay, without further ado, let's start our discussion today. First, Michael, could you please introduce the methods of IRS would contact us and the methods in general IRS would not contact us?
Yes, let's go on to the next slide here. So first kind of question is you get some contact, you're approached in some way, and there's it appears to have the imprimatur, the appearance of this is from the IRS, this is from the taxing authorities. Well, there are some ways that you can be on guard and have an instinct as to this is probably not from the IRS. So ways that this is probably not from the IRS. Social media. Social media is not an official channel of IRS official government communications. They are not going to Instagram you or Facebook you or any of the varieties of social media. So be on guard if you're getting something via social media. That's one. That is a channel of communication that really is not not used for official IRS communications. Very similarly with this is via pre-recorded voicemails. This is very, very common too, that it is a pre-recorded voicemail. It's not a live person. If you listen to it carefully, and it says something like this communication is from the Internal Revenue Service. You are delinquent in your taxes. Contact this number immediately to determine how to settle the debt immediately. Otherwise, law enforcement will be contacted. Something like that. And it's pre-recorded. Even if you answer it and you say hello, hello, you realize it's pre-recorded. That is generally also not used by the IRS. And that in combination with the next one that we see is that there is some threat in the communication. The IRS, and this is the taxing authorities, generally the FTB, they don't need to threaten. They know. They know you know. When it says IRS on it, that's the threat. They don't have to do things like we're going to call law enforcement. We're going to, the other one that's very common recently is we're going to contact immigration. We're going to contact Homeland Security. We're going to do those things. That is not the way that the IRS operates. What they're trying to do, what the scammers are trying to do, is again, what a lot of scammers do is try to create a crisis, try to create panic so that the person does not think carefully and just says the social security card number, or seeing below, the person just acts out of panic or concern to quickly make the payment. And that is not, again, the way the IRS works in its normal operations. This is a mark of a scammer. So the other two to be on guard for is the call or text message. This is quite odd, particularly text message is very, very odd. So be very, very on guard for that. So again, text message or call where they are threatening law enforcement. Also, if they say, I've heard this one before. They say, we're going to contact the police, we're going to contact the sheriff. IRS is the sheriff. They'll send their own people to go get you. They don't need to call the police for for taxes. They have revenue agents. They have criminal investigations. That's a whole different thing. So if that's part of the call, that's a red flag that this is something odd. The other thing is classic kind of tell on this is if they're asking for payment in a way that seems like the government would normally not ask for payment. Like if they say, you owe taxes and we're going to contact the police and we're going to contact immigration unless you send $5,000 of Amazon gift cards to Twin Oaks, Ohio. I don't think the US government generally gets paid in Amazon gift cards. That's odd. That's something that the government doesn't operate that way. The same way if they demand like a money order and they say it has to be certified funds. This one's a little bit harder to tell. But this one, because there are situations where collection activities does have to be done by certified funds, money orders, and then you'd say, okay, money order. They say it has to be a money order. It has to be a money order. And you say, okay, made out to the U.S. Treasury. They say, no, Frank Grabowski. Yeah, he handles all the government payments. Send it to Twin Oaks, Ohio. Frank Grabowski pay. What? What? No. You don't pay in the own name, somebody's private name for the IRS. Again, these are angles of communication. Be on guard. The other thing is with IRS communications is don't panic. It is a completely normal response, even if it is the IRS, and they are contacting you, is to say, I can't discuss this right now. I need to speak to counsel. And say, I need to speak to my accountant and I need to speak to, more importantly, often my lawyer. I don't want to say anything until I talk to that person. Again, we're not in this Fifth Amendment criminal law, zone. We're not talking about that, but it's a perfectly reasonable response to say, I can't speak to you right now. I need to obtain assistance. And a normal IRS person, which is the way it normally will be, is they'll say, here is my contact information. This is the office that I'm out of. After you've spoken with them, please call me back. That's a normal way. Again, trying to gin up panic, that's not a normal way. Let's check the next slide. So we say, is this from the IRS? What else? Now,
Yes, how about a letter?
this is the one that also is tricky. So we know a few ways that it's probably not the IRS. How do you know it is the IRS? How do you know it is the IRS? Well, usually the IRS is going to contact you, interface you via US regular mail. That is almost always the first contact point, is that you will get something, usually it's an envelope, kind of, regular, A10 envelope. It has a plastic window and it will have that IRS seal on it. So that usually is the first contact point. where you will see that. Critically on this, if you have moved or you've moved around since you last filed tax returns, keep your address updated with the IRS. There are methods. There's, of course, the IRS is classic for this. There's a form to file. If you've moved from the place where you last filed your tax return, the IRS may not have your new address. Prepare that form, fax it, mail it over to the IRS so that they have your address, so that communications are going to the right place. This is also critical, again, if you move or you move and you rent the house. Again, do you want your IRS mailings going to where the tenant lives? Probably not. You probably want to update that. So there's a form, again, you fill that out, send that to the IRS. So US mail is usually the first point of contact. Email, telephone calls, text messages, faxes generally only occur after you've given permission, after you've already been contacted and you're already working with an examiner or you're already working with someone. So these are very, very rarely the first point of contact. Telephone calls, every once in a while, but that is pretty rare. Usually there is a US mail notice, and we'll get to that in a moment of what the notices look like, that says there's something wrong here. We need to sort through this. And this also goes to our last point here. For the communication sent by the IRS, because it's a massive organization, the IRS communications are generally highly coded. And what do I mean by coded? There's a lot of information on that document. It isn't just something that's has like a name on it, and it's basically fairly blank. Generally, the IRS notices will indicate the office branch of the IRS that was sent, the type of letter it is, because the IRS does not free-form handwrite letters. They have standard letters. They have sort of CP11, CP12, CP14, CP501, 502, 503, on and on and on. And it's a standard letter of what process you are in the communication with the IRS. So that's another thing to take a look at, that when you get the IRS communication, before IRS communication, does this look super generic, or is this very specific? This is letter code, CP11, tax year 2023, taxpayer. This, if it has those things, this may be for real. So of course we'll talk in a moment. Go get it checked out. But things that are highly generic or look like mass mailer flyers, that's probably not from the IRS. Again, always bring it to a professional to check it. But first class US mail is usually always the first point of contact.
And Michael, can you give us some clues how we can tell the letter is a fake letter?
So, okay, you get the letter and you say, okay, it's not a text message. Sure, I know it's not a text message. It's not an Instagram post. It's not on my TikTok. Yeah, okay. So I'm not going to make that mistake. But I got something in the mail, and this looks pretty legitimate. This looks maybe like this is from the government. A really common scam and problem that we have actually when we're we do estate planning. There is a very common scam out there that all clients get, is after a deed is recorded, this document comes and it looks like it's from the government. It says, a document has been recorded regarding your property. To obtain a certified copy of this document, you pay $120 or something like that, or get a copy of the. Actually, it's not even a certified copy. It's get a copy of the deed.
It is so common that we have to actually send our clients a reminder to
Yes, part of
watch
our
out
standard
for
thing to
that.
say, watch out once a deed is recorded. And basically what this person is doing is they're just charging $120 for a 5-cent copy. And they don't say it's from the county of X. They don't say it's from the state of California, but they make it look like a government solicitation and say you have to pay to get a copy of this deed. Again, if someone sends us an email, we say, yeah, we recorded the deed. There you go. There, yeah, how many copies do you want? You can have as many as you want. But they make it look like a scam. So this is the key thing. How do you know that that's a scam and other things are a scam? Well, you can use these clues. One is it's for IRS is a return you've not filed yet. it's referring to, let's say, for the year 2020. And sometimes I see this because some of the scammers are not very smart. They'll say, "Oh, for your 2025 return." It's like, no, no, no. 2025, you filed the 2024 return. It's always one back. So that's wrong. So, but what's the principle? It's about information that's either generic or not true. If the information, when you look at the face of the letter, it's generic or not true, that maybe clue is false. Another key one: no IRS logo or no IRS coding. Or if it's from another government agency, there's no logo, there's no coding on it. Logo is key because there are some things that it's a solicitation, like that deed scam. I call it a scam. They would defend. They say, no, 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 it's not a scam. We're providing a service. We're giving people copies of their deeds. It's a service. Well, okay, yeah, we can't shut it down because technically it is a service. They're making it look like the government, but they say, we never said it was the government. We didn't put a seal on there. We didn't say government. We didn't put IRS on there. We didn't put county on there. We just made it look like a government communication, but we didn't put that on there. Otherwise we'd be in big trouble. So that's a key thing. Is there an IRS logo on this? Is there an FTB logo on this? Is there that coding that I mentioned where they give the information of what kind of letter is this? What tax year is this? What is the return address? All of those things. If that's not there, be on guard. Here's another one: spelling and grammatical errors. I see this fairly frequently in a number of scam letters. They don't even put 10 minutes into the scam to spell check it. Like sometimes it's just clearly written in a form of English that is not correct, if it's English at all. The IRS gets the spelling right. They are generally grammatically correct. So
Especially with this AI technology now,
well, that
probably
actually
only
is a
took them 2 seconds.
key thing. Yeah, with that is it's nonsensical. What it's asking is nonsensical. That's a clue. Um, Here's another one that also can be a clue: is it demands immediate payment, but it doesn't really explain why. It just says pay the IRS, pay this amount. And it gives like an odd way to pay. That's the other thing that kind of this point 1 and 2 here. There's an odd way to pay. The IRS does send payment demand letters. Trust me, they send a lot of payment demand letters, but it's usually, again, IRS logo, lots of IRS coding, and it says, you need to pay for the 2022 tax year because there was, an income adjustment. Here's why. There will be some reasoning, and then it will also generally always say, and if you don't think this is correct, you have X number of days to reply back, and here's how you reply back. That starts to look or like an IRS letter. Again, if it says, hey, urgently send, Amazon gift cards, to some address that one's never heard of, that's another key one. I mean, it seems obvious, but we encounter this every once in a while. The IRS operates in America, in the US. We don't take money and take payments outside of America. This was going around for the Latin American community that would say, the IRS is doing collections. Send the money to Venezuela or send it to Colombia. The IRS doesn't collect money through Colombia and Venezuela. That was trying to go to a community and prey on them. So again, that's a clue that is fake. Here's another one that was going around quite a bit for a while, not so much in California, but it was going around in the Midwest and the South. Of the IRS noticed that you won like a sweepstakes or a lottery, and they were saying, "Oh, you won the Irish sweepstakes, and you are the big winner, but you have to pay the taxes in order to get your prize. So in order to get the washer dryer combo, in order to get the brand new car, you got to pay the taxes, and then we will deliver you the prize." The IRS does not deliver anybody prizes. The IRS delivers people bills. So if you're getting anything that's saying you won something, you need to pay the taxes, have your guard up. That is a clue that there's something wrong with this. Threatens jail or immigration action. Again, the IRS doesn't threaten these things. Their presence alone is the indication that you have to solve it. They don't need to threaten. Um, we mentioned before, request payment to someone other than the U.S. Treasury. It goes to the U.S. Treasury. If it wants payment some other way, that is unusual. And then it doesn't arrive in a official government envelope. That's another one. It has stamps on it. That's the IRS uses mechanized posting. So if it's not in an official envelope, that is a clue. This is not always true though when things get sort of more in depth. If you are dealing with a regional office, you already got the official letter, and then you're dealing with a particular office of the IRS. Sometimes it will be an official government envelope, but the postage there may be a variety of ways there. But usually, you already know what's going on by that time. So we've already cleared. It's obviously not it's not on its facially defective as a fake. It looks like it's from the IRS, but go through these clues to see, what am I dealing with here?
Yeah, a lot of our audience may also receive so-called CP notices before. To the audience who don't know what CP stands for, CP stands for computer paragraph. And these notices usually they alert taxpayers about potential discrepancies on their tax returns. CP notices are triggered by certain actions or balances due and sent by the service automated notice system. So Michael, can you just
Yeah,
introduce some major CP notices our audience may receive in their mail?
these are things that if you get this, go see a professional that day. The one that actually is a terrifying, or the one that I routinely encounter is a significant problem. Is the computer notice, the CP11, is because this generally provides a very short time frame in which to respond. And so basically CP11 basically says, oh, you filed your tax return. We've noticed a mistake on the tax return. And I joked, fixed it for you. We fixed it for you, and you owe. And this is a real challenge in some ways for taxpayers, worse than the CP 3219, the classic, the notice of deficiency. There is a problem with your return, there's a problem with your return position, and the IRS, we are challenging this. And the CP 3219, the notice of deficiency, we lovingly call it the ticket to tax court. That's the 90-day letter. You have 90 days to respond to that, but you have to file a petition with the tax court to do it. That one is generally you have a longer time frame, and there's a procedure, and it looks very scary. It's a big package because they explain why they think there's a notice of deficiency, and then they say you have 90 days. That one, usually people realize, wow, I better get this fixed. The CP11 and some of the other CPs, what we get concerned about it, is tax professionals, is that one is generally just in an ordinary envelope, and we've had them as extreme. Of We had one that there was a self-employed real estate agent was taking up business expenses on the Schedule C, and the IRS was fixed it for you. We denied all that. So none of those business expenses, we think that's all unsubstantiated. So the taxpayer had XYZ amount of gross income, and they said, yeah, gross. We're not going to permit any of the deductions. Fixed it for you, and there's a very short time frame to basically immediately send to the IRS to say, no, 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 that's wrong. That we contest, we oppose the fixed it for you. We want to argue the merits of that return. The CP11 is very, very dangerous because if you miss that deadline, they say, that's it. You didn't oppose the fixed it for you. You didn't oppose the adjustment. The adjustment is now final. So we're not going to argue about the adjustment. We're just going to argue about you paying. And you say, well, no, 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 I don't think I should owe. They say, well, you should have done that 30 days ago, but you didn't. So now all we're going to argue about is paying. And the problem with that is that now you're behind the eight ball because you can't argue about, I don't have to pay because I don't actually owe that because they say that ship has sailed. So then what you have to do instead is seek collection due process relief. You have to use this kind of complicated procedure to try to oppose the correction. And you're kind of behind the eight ball. So things like that, be careful with these because there are tight deadlines.
Okay. And Michael, you just mentioned it's very important when you receive a notice from IRS to respond immediately. So who should our audience contact first? Should they contact their accountant first? Should they contact IRS by themselves? Or should they call our office, contact a tax attorney? Can you give us some recommendations?
And this is the key recommendation. We love our accountants, colleagues, but we have sometimes different roles in this. And this response of which I get a lot from my clients, don't worry, I gave it to my accountant, is not always good for the client, the accountant, or later the lawyer, is because number of things. One is the IRS notices are extremely time sensitive. And the remedy, what you need to do, may be beyond the practice of the accountant, tax preparer, CPA. And that's okay. That's okay. Some, or many accountants say, I handle, tax planning, I handle the tax processing, the guidance of return. But if you get, the notice of deficiency, that's kind of beyond my practice. I don't file petitions in the tax court, or I don't file, the IRS appeals protest. I can, do some things, but if what you need is the petition to tax court, or what you need is the IRS appeals protest, that's just not in the wheelhouse, the standard practice of the accountant, and that's okay. So what I would recommend if someone gets an odd letter from the IRS, go visit the accountant. That's okay. If the accountant says, yeah, I know what this is. This is not a big thing. Okay. If the accountant looks at it and says, this is kind of odd. Maybe you want to talk to someone more like us, and be really careful because I've encountered this actually sometimes referred from accountants because they're starting to become a problem. Is this other, first, don't worry, I gave it to my accountant. And then the second thing, my accountant wrote a letter, so it's okay. That very well may not be okay. So what do we see with why is that maybe not okay? We can go to the next slide.
Oh, can we go to the next slide?
So why is this, don't worry, I gave it to my accountant, maybe not okay? And sometimes maybe, again, puts the accountant into a position that is not a position that they want to be in. Why? Some responses, like the statutory notice of deficiency, the tax court, the ticket to tax court, you have to file a tax court petition. And that is court practice in a court that is famously, the United States tax court, famously persnickety and rigid as to how everything is done. I'm old enough to remember they used to have their rules with the tax court petition that it was literally down to the type of font and the size. And it used to be a monospaced font, size 14. It was not in a monospaced font, size 14, rejected non-compliance with tax court procedure. Rejected non-compliance with tax court procedure can sometimes deem that it was not filed timely. Literally because you say, well, I used Times New Roman, that's what it is. Times New Roman is not a monospaced font. It's proportionally spaced. Tax court says, no, we don't take it. Monospaced. Has to be in that way. They've relaxed that now. You can now use proportional spaced fonts, but they are very, very rigid. Also, it's written up in the guise of a petition. And the way a tax court petition is designed, it's 6 parts. It is always 6 parts. And the parts are exactly 1, 2, 3, 4, 5, 6, done in exactly the same way, regardless of there's an error on my W-2, all the way to some famous ones like Beyonce had some tax trouble. It's always 6 parts, regardless of the way you want to do it. It has to be done that way. The same way we get this with IRS appeals protests or collection due process challenges. Oftentimes, particularly on the CP notice or the various notice of what the problem is, it will say you can bring this to IRS appeals or you can bring it to the regional office director to have them review it. Be careful of this. A simple letter can be deemed the response and then summarily denied if it doesn't follow the procedure that they wanted, the recitation of the facts, outline of the law, and then a verified statement by the taxpayer or the professional that that is the response. So I've seen this many, many times that there's becoming a tax controversy. There's some friction between the IRS and the taxpayer and the accounting professionals, and the accounting professionals basically just stay on they write a letter and say, no, we sent it on time. It was sent from my office. There's no problem here. And then here's a copy of it. Had this one recently, actually, just about a month ago. IRS receives it. They say this was an assessment of penalties. They said, no, we never got it, and you didn't include that there was any certified mailing as proof, and we never got the thing. And so we don't believe, and you just said you sent it. You didn't provide any facts or anything for us to rely on. Denied. We deny the penalty relief. We're not going to give it to you. And then the key problem is went to respond to the IRS again and said, oh, we want to protest the denial of the penalty. And the IRS said, yeah, you did. That letter, that 6-sentence letter that you sent, that was you get one bite at the apple. That's what you sent. And you just said, I sent it. You didn't provide any. You did. The key thing is what they didn't do is they said, we wanted to argue. So you said, well, wait, but we want to argue about penalty abatement and first time penalty relief, and that the penalty doesn't, this was a penalty that was imposed for willfulness, that the element of willfulness is not there. And they said, again, you get one bite at the apple. You sent us that. We looked at that 6-sentence letter and we hit denied because you didn't explain, why the penalty should be abated. It says on the CP notice that that it should contain facts, law, and a verified statement. You sent us 6 sentences. That was the response, and it was denied. So now you are not arguing the main case. You're arguing an appeal that goes somewhere else. Again, this is like the criminal trial. This is against, the defendant shows up for the criminal trial. The lawyer's not there. The person's convicted. They say, well, wait, I want to argue at the trial. They say, trial happened. That's over. So you're convicted. Now we're going to, if you want to appeal it, you can go appeal it somewhere into the minutia of the IRS. But what you sent was the response. So this is another key thing. When encountering the IRS, your first bite at the apple should be a good bite. The impression with the IRS the first time should be a good impression. Use all of your resources. When you say, no, I sent the thing. It was on this date. It was sent out of this city, on this time. It was sent via ordinary U.S. mail. Again, certified mail. If you're sending important stuff, certified mail. But if not, lay out the facts. Give as much fact evidence as you can. Statement of law. Did you look through? Is there a reason to abate the penalty, even if you're wrong? There are some situations where the penalty, not the interest, but the penalty can be abated even if you're wrong. Even if you say, yeah, I guess it didn't, maybe I didn't send it on time. Maybe I was late. But you're penalizing me for willfulness or like, let's say a late W-2, W-3, where they can say it was an intentional disregard of the code, not negligent. You say, whoa, 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 whoa. Intentional disregard, that's a really, really high, penalty. Kick that down to negligence. And hey, I've never been late before. This was the first time penalty abatement. So I get, everybody gets a freebie, right? Argue that. because what we had the problem in the case that I just had is that the IRS examiner said, yeah, you sent the letter. You didn't ask for penalty abatement. You didn't say, not willfulness. You just said I sent it. Full stop. And we said you didn't. Full stop. What you can't, again, just think of it like, a trial or anything. You can't keep bringing new arguments to the same person. You get one shot, and then the person, considers it, and then, if the shot's a good one, they say, oh, yeah, I see what's going on here. And also, the lower levels tend to be more favorable to the taxpayer. They tend to, if you say, it is my first time, it was, a small error, I really think, I sent it. Generally, if there is, good facts, good evidence, and good law, it's favorable. And this is the key thing is, with a lot of this is most people who work for the Internal Revenue Service, the Franchise Tax Board, don't hate the taxpayers. They're people like everybody else. I work for the IRS. They're just regular people. But they say, give me a way to say yes to you. This 6-sentence letter that says, yeah, I sent it, I have no proof. I can't, if I say, yeah, no penalty, how do I tell my boss no penalty? He's going to look at this and say, you granted relief on that? There's no evidence. You can't do that, Mike. That's not allowed. But if you get a couple-page thing with all the evidence and all the law, and say, I granted the relief, it's the first time, there's all this evidence that he tried to do it. We said willful, but that's probably a stretch because again, first time, the form was done by an accountant. It's so it's not like self-done. And I say, so I granted him some penalty relief. Manager says, yeah, that good. Proceed on to the next one. That's how you get into a safe zone. So and actually, so with that, let's take a look at things that we can do. Or on to the next slide.
I also want to add, other than what Michael just said, you really need to set up your case right and have, the first bite of the apple, correctly. But also I want to add the difference between attorney representation and the CPA representation in a IRS case. I don't know if the audience has heard of this concept called the attorney-client privilege. So usually the attorneys and the clients, they have a privilege, and this privilege protects confidential communications between an attorney and the client for the purpose of the clients obtaining legal advice. So in a tax matter, this can protect communications between the tax attorney and the attorney dealing with the provision of tax advice. But I don't think that there is this privilege between the CPA and the client. And Michael, if you can give us a brief introduction of this privilege and how this works, that would be great. And Megan, can we go to let's skip the next slide. Let's go to the slide after that. The next one. Yes, this one.
Yeah. So this can be very, very important. What is the attorney-client privilege? We are unique in the United States that for communications between client and lawyer, those communications are privileged. They cannot be essentially subpoenaed by the government. So again, emails between client and attorney, communications between client and attorney, the work product research done by a client, but done by the attorney, guidance given by the client to the attorney, that is all privileged. So if the IRS says, give me your file, the attorney says, well, things we talk about, no. Things I wrote up, no. Things I researched, no. The original W-2s, yes. The return, yes. The bank statements, yes. Fact documents we are not privileged. That are just the actual evidence. That's not privileged. But all the communications, all of that is privileged. So this can be very helpful if one's getting into a sticky situation or trying to plan, because the key part, unlike attorneys, certified public accountants, there is not a generalized privilege for communications with the accountant. So if there's a situation where particular taxing authority or other civil authority says, send me the whole file, send me everything that you have. The CPA has to send everything. They have to send the whole file. It is confidential. So let's say in a lawsuit or something, a plaintiff maybe can't get that from the CPA because there's in some cases a qualified privilege, or there's some cases there's confidentiality, but it is far stronger with the attorney-client privilege. So if you have a situation that is a problem, and you say, we better be very cautious on this, you generally will want the attorney involved. And there's two directions for this. One is tax planning, is that there's arranging one's financial affairs, and that is privileged, the attorney-client communication there. And then the same way, it's especially privileged if there's tax controversy. If there is an inquiry or challenge from the IRS, communications with the attorney are privileged. Questions. So, attorney, do you just do the whole thing? Don't you need the accountant involved? Yes, we need the accountant involved. We need the CPA. We need that person. But the way it generally works when there's a controversy is you should hire the attorney first, and the attorney hires the CPA, and the attorney works for me. And the attorney is my arm, my professional, and we are working together. So I am not going to go through all of the financials, all of this. I'm going to hire the accountant and say, accountant, distill down what the problems are. This is here's a really common one for commercial situations. Business is in trouble because there is now an IRS examination, and I'll hire the accountant, and I say, okay, here's what the IRS says is the problem. Accountant, tell me how bad it is. Really, how bad is it? That's what they found. You go through it and tell me how bad is it. And sometimes the accountant will come back and say, oh, when they start digging, there's going to be some problems with this. Again, you don't want that report to be just out in the open, or you don't want the accountant just sharing with you saying, oh, there's all of these things that we found wrong, without some protection. Because what generally should then happen is that we may then say, working with the client, is, well, you need to appropriately settle the controversy. If they're saying you owe $10,000, but because of problems, you may owe substantially more, you maybe want to just settle that matter quickly and efficiently, and then fix your practices and bookkeeping or whatever is causing the problem to not do that anymore. And quietly, appropriately, lawfully go forward and be compliant. So this is a very reliable direction to enable to get a full understanding of what the problem is. And then when you have that full understanding, again, it is privileged between the lawyer and the client, and then lawyer can give good advice. Key thing, though, of course, we always have to warn, the attorney-client privilege can never be used for fraud or illegality. You can't say, oh, well, I'm committing tax fraud, so I'll just hire the lawyer and just cover it all up. No, there's no privilege in that situation. If there's fraud, then there is no privilege. Or if there's criminal activity, like the person says, oh, well, here's what I do. I have an account over, a foreign account, and I have a foreign business. And so what I do is whenever I get income, I say that I have this independent contractor, and I siphon out income and I put it into the foreign company. And that's how I do it. They say, whoa, they say, conversation over. This we can't help you with this. You can't do that. That is not a lawful position. Unlike, though, some situation where we say, we had, which is really the more common one, is say, there were, we didn't know how to treat this particular position. We've been treating it this way. It's a complicated transaction. Now the IRS says that they don't like it, but I think it's actually fine. Okay, that we can talk about. That actually, there's a lot we can do, because that happens all the time. Dealing with international business transactions, that's a common one. Dealing with Silicon Valley unusual assets, that's of course common. But there is a crime fraud exception for privilege.
Great. Michael, other than attorney-client privilege, you just introduced, any other things you want to mention to our audience, or what kind of service we can provide for our audience as tax attorneys?
Yes, and I think this is the key thing, understanding the different tools for the job. So with this is, and to give the right impression, these controversies, how these come up, is often not either the attorney or the accountant. It's both. You need both. And because they're different skill sets. So, of course, the financials and the return preparation, all those things, the accountants are very, very good. But on the other side, if we say, I need to explain to a court or I need to explain to an IRS appeals officer why those numbers are what they are, why that was put on line 7 and not line 12, why that was hit with the 0.25 rate and not the 0.35 rate, why I did that, that may need a talking professional, maybe not a calculating professional. So classic ways where we can help and provide service, tax court or U.S. Court of Claims petitions. So you get the statutory notice of deficiency. They say you have to contest this. Take a look. You have to contest this via the court process. File a petition. That is, writing up a petition. U.S. tax court, pretty difficult. U.S. Court of Claims, very difficult. U.S. tax court accountants can practice there, but they generally don't. They generally don't. U.S. Court of Claims, this is, I want my refund. I'm claiming against the U.S. government. That's only attorneys and only attorneys who are licensed at that bar. So even if you say, well, I have an attorney, is it a Court of Claims attorney? No, I'll ask her. Probably not. That's a special license, so to speak. Why? Because in the U.S. Court of Claims, who's the defendant in every single case? The government. So the government basically just sits there and gets sued all day in the U.S. tax court, the U.S. Court of Claims, and the U.S. Court of Claims is that the government owes me money. So that's an angle. I like both of those forms for tax controversies. IRS appeals. IRS appeals is inside the IRS. This is a professional IRS appeals officer. He or she is generally neutral. They're designed as, in a sense, like a mini court. It's kind of like a mini court that is inside the IRS to basically dispense with controversies efficiently, cheaply, quickly for the taxpayer. And this is basically one where, and why this is a great forum, we handle a lot of these, is the IRS basically says, okay, taxpayer, if you think we're wrong, write it up. Write it up. Give us the facts. Give us the evidence. Give us the law. Give us the argument. Write it up. And you will get a neutral person who will take a look at it and say, am I convinced or not? And you can get crack at the first officer, and you can also appeal it inside IRS appeals again. You can even get additional review. Again, this is one where I've seen this many, many times. Be careful with just either the letter just from the taxpayer or the letter just winged off by the accountant, is because this is your moment on stage. This is, you get somebody who is, I wouldn't say sympathetic, but is professional, and looks at the claim that says, okay, the taxpayer says the IRS was wrong, and the person looks at the document and says, okay, convince me. So you should be convincing. Lawyers' job is to be convincing. That's what you're trained to do. Try to persuade. Try to do things. That is a different skill set. The other last one that I would like to mention, because we do a fair amount of practice in this, and this can be very, very helpful even to accountants. And this can be very, very valuable if there's a situation, it kind of goes like this. It's called a Section 9100. It's from the Internal Revenue Code, Section 9100. It's a private letter ruling. And this is basically this. There was some election that had to be made, or there was some filing, not the filing of a return, but basically like choosing to be an S corp, choosing to be a mark-to-market stock trader, choosing to be a C corp, choosing to be any one of these things. And you have to make this election, you have to make this tax decision. And it didn't happen. There's not even an argument of like, oh, it was mailed or something, or it's faxed and like it didn't connect or something like that. We didn't do it. We just didn't file the election for whatever reason. We have to have a reason, but for whatever reason, it didn't happen. And there's basically this: I was late, but I was consistent. I'm sorry. Please don't make me pay, or please don't make me be stuck with this detrimental tax we call position. So if I wanted to be an S corp, but I didn't file the election, and I should have been, and the IRS came back and said, you didn't file the S corp election, but you filed for the last 2-3 years the 1120S. You kept filing the 1120S, the S corp tax return, but you're not an S corp. You never asked for it, and we never gave it to you. And you need to go back all those 3 years and become a C corp and pay all the corporate taxes at level 1, and then everything that everybody got as a distribution, pay individual taxes at level 2. We want you to do that. 9100 relief. Say, no, 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 no. I don't want to go back all those 3 years and flip flop all of the way the corporation works and pay all of those penalties. I was late, but I was consistent. I never took different positions. I'm not going to do this I'm going to be consistent in the future. I need relief. And basically what 9100 relief is, private letter ruling, is you say, please, Commissioner of the IRS. Commissioner of the IRS under 9100 has authority to basically, for certain things, waive a deadline or permit, basically, even the IRS appeals or the US tax court, they can't do this. Basically, the IRS, the commissioner says, we'll let it go. You're not doing, let's say that C corp, S corp thing. The law allows you to be a C corp, or I'm sorry, the law allows you to be an S corp. You qualify as an S corp. You file the returns like an S corp. You did everything like an S corp should do, but somehow you messed up the election. And to make you go back all of those years and redo the returns and then pay under a different theory and then be stuck as a C corp when you don't want to be a C corp, that we don't want to make you do that. A just tax system would not be so punitive to you. I will, through my executive power fiat as commissioner of the IRS, say we let it go. We let it go. It can be massively, massively valuable. And this is always something to take a look at, because I've encountered this sometimes with CPAs or other professionals, and they say, "Oh, it's late. You're late. There's no argument. There's no argument at all." Well, the question is, 9100 relief is kind of a Hail Mary. It's basically begging for forgiveness, but it's always one of those things: is, well, how much does it cost to do a 9100 relief? Private letter ruling request, X amount. How much do I owe? Y amount. Wow, Y amount's way bigger than X. Try it. Ask. If you don't ask, if you only owe $1,000, then maybe you just let it go. You pay $1,000. If you owe 100,000, I'd probably send a letter. I'd probably say, can you let this go? Is there a reason where I can get relief? So that can be very, very valuable, especially when other professionals say it's kind of hopeless. Sometimes it really, sometimes there's nothing that one can do, but sometimes it can be very valuable, and can be something that actually you and the IRS are happy with. They say you should not be a C, you should be an S. We'll let it go, and you'll be consistent because you actually were justly doing what you're supposed to. So there is help out there. Let us know, and we can work with it.
And before you go, Michael, we only have 3 minutes, but I do want you to share some information about payment to the IRS.
Oh, sure.
So it is still mailing a check, a paper check, the best way to pay for the IRS payment?
There are, of course, better ways. IRS direct pay and IRS online account are both preferable. I think IRS online account is very good. if you go through the appropriate procedures and you create your IRS account. You also can get your tax transcripts, your wage transcripts from the IRS online account. So it's a good way to make sure your IRS, your address is updated. Make sure essentially almost like pulling a credit report. One can pull your IRS transcript and say, "Yep, that's what I filed. That looks right." You can pull the wage and income transcript and say, "Yeah, I only work for one company. Yeah, I don't have any extra 1099s or something like that." That's very good. So I generally recommend the IRS Direct Pay or the IRS online account are very good ways. Of course, if you have the tax preparer or accountant and they put your check information on the return, and it's part of the filed return, that's very, very safe. If you file a return and it's auto paid through there, that's what I do. That's very, very safe, goes through that system. And then the other thing is, if you do pay by check, just be very, very aware of the particular form and where you're supposed to send it. So on the instructions, and oftentimes you have to take a look at, we're in California, there is a receiving office for California. It's often Ogden, Utah. But if you're East Coast, it's a different place. So figure out which one it is. Certified mail, again, make copies of everything. Certified mail is by statute, by the regulation, the official way. So if you have, you put it in the envelope and you copy it and you put the green certified mailer on there and drop it off at the post office and they stamp it, that green thing that you have back that has the IRS postmark on it, that is considered as a matter of law that you sent it. So that can be very powerful. Be very careful. I know we're kind of tight on time. Be very careful on the converse. I get this all the time when people say, "Oh, certified mail, I'm going to do one better. I'm going to do FedEx, or I'm going to do UPS, or I'm going to do USPS priority mail." None of those are by statute considered official mailing. The statute doesn't say that that's an official mailing. So when you have the tracking number from FedEx, that actually by law doesn't count as the official proof. Certified mail does. That's what's in the law. The other thing is, be very careful, is that those systems usually require someone to drop off, like the person actually deliver that thing in person, like the FedEx guy or gal to drop it off like in an office. A lot of these are basically locked government facilities. Ironically, if you're the USPS mail carrier, you're a federal government employee, you can go in there. But sometimes the FedEx guy, the UPS guy, he can't go in there. He's not sure how to get this thing into the place. So just be careful. Be careful with that. I know it seems like FedEx is a better way to do it, but be careful. There are ways to FedEx things to the IRS or USPS or priority mail it, but it's often a special address. So just caution on that. So that's what I have for you there. We have another webinar coming up, and Xiaowei can introduce that.
Yes, so for the main webinar, we're going to talk about how to settle a trust and tax matters after death. We're going to discuss how to dissolve a trust after death and how to manage and distribute assets after somebody passes away and manage tax complications. So if you're interested in joining us, please sign up and scan the QR code, and we'll see you online. Next month I believe it's May 22nd. It's a Thursday at noon. Okay, thank you very much for joining us today, and we hope you have a wonderful afternoon. Bye-bye.
Take care. Bye-bye.